Hello and welcome to The Trade. Before we get to the technicals, a quick look at what we're seeing. US jobs growth unexpectedly accelerating last month, the unemployment rate falling to 4.3%, increasing the likelihood that the Fed will keep rates on hold. However, the largest increase in payrolls in 13 months came as a revision showed the US economy added just 181,000 jobs in 2025, compared with almost 1.5 million jobs in 2024, the year before President Trump regained the White House. Meanwhile, the US budget deficit is expected to increase this year to $1.85 trillion, according to forecasts from the Congressional Budget Office. That has the deficit at 5.8% of GDP. It's expected to reach 6.7% in the next decade, far above US Treasury Secretary Scott Bessent's goal to shrink it to around 3% of economic output. US Treasury yields climbed following the stronger than expected payrolls data. And having a look at where currency markets are tracking, we saw a big spike coming through in the Aussie, 71.3 US cents. All right, let's get across the charts now and have a look at all those technicals. Zoran Kresovic from Blueberry Markets joining me now. I mean, have a look at that Aussie, Zoran. A great time to go overseas if you can.
Well, absolutely right. We should all be starting to look at those holidays in the middle of the year when it's summer in the Northern Hemisphere. But besides that, Juliet, Aussie is definitely one of the best performing currency pairs right now. If you're looking at the G10 currencies globally, it's been having an astonishing upside run, especially since RBA has actually lifted the rates, last week. So we're likely to continue that trend. We've broken out of what's considered a falling flag pattern in a rising market. We've gone out of the sideways range back at 67 cents, and we are likely to crack that 72 cents at some point in the near future. So just for those ones that are actually, like some factual information, this is the very first time in more than 3 years that Aussie has actually gained momentum and broken through that 70-71 cent range. So we're likely to see further upside to continue. And as long as the RBA is fairly hawkish in terms of the monetary policy and further interest rate hikes later in the year, we're likely to actually head higher and probably, gain some momentum there.
Absolutely. I'm going to go put some money on my travel card. Speaking of money, petrol prices seem to be a little bit cheaper, but what are we seeing with global oil prices?
Yeah, that's slightly a different ball game in general, Julia. Purely on the basis that whilst the chart is actually looking exceptionally well, if you're actually a long or if you're looking to potentially take a long position on this, what we're seeing is from the Energy Admin Institute in US, we're seeing exponential amount of crude oil or backlog of crude oil actually in the inventory side of things. So, despite that, obviously crude oil is still moving sideways. It's breaking the long-term downtrend that I've been speaking for such a long period of time. It's gained momentum. It's in a nice uptrend at the moment. Hasn't broken the most recent high. However, it's hovering sideways and we are gaining momentum. We are around that 200-day exponential moving average. If we can break the 65.60, then we are likely to head towards the $70 mark, which should add a level of inflationary pressure on the global economy as well. So that's something that we should be looking at very closely. Aside from that, we've got a geopolitical risk, US-Iran tensions, somewhat maybe tempered in the short interim. However, any escalation or any concerns around there are probably going to provide bullish headwinds for crude oil to continue head higher.
And let's get to Bitcoin. I mean, wow, what a fall from grace. ETF redemption seem to be behind this. Where do we see it consolidate potentially?
Yeah, so it's been around 1.3 billion in liquidations. And looking back from October till now, there's been an astonishing amount of ETF liquidations that are going in, and perhaps maybe a lot of those investors and traders are doing a pure rotational play. Perhaps a lot of their money is going into commodities such as gold and silver because they have been outperforming the market as well as the global equities. But in the interim, things are not looking very good for Bitcoin at all. So on a technical aspect, we're probably seeing a head and shoulders pattern at the market top. which is generally considered as a reversal signal, and we are likely to actually see crypto, including Bitcoin, head lower. Now, what level we are looking as the absolute key is probably $70,000 level. Now, that level has been actually broken. We've actually gone a little bit deeper and further down towards the $67,000 range. If we can't hold around these levels, Julia, and if the price can actually recoup and come back above the $70,000 mark, then it could be a falling knife, and we could be having further liquidations in the market, both retailly and institutionally. We are seeing massive rotational play. If looking at the global fund managers index, cash levels at this point are at the historical lows. So a lot of money is actually gone into those best performing equities as well as commodities. And it looks like we're actually in a cycle where cryptos are getting absolutely smashed right now. Just a funny, factual state that whenever we've gone into a bearish mode in cryptos, or in particular in Bitcoin, looking at 2017, 2018, and most recent one, 2021, 2023, historically, Bitcoin has been bearish and dropped between 75 to 80%, so on some extent to 85%. Right now, we're sitting at 78, so we probably got likely a little bit more further downside to go before it can actually consolidate and gain some momentum and get some buyers.
All right, Zoran, thanks for bringing us up to date. Great to see you as always. Zoran Kresovic there from Blueberry Markets. We're going to take a short break. That does it for this edition of The Trade.